This is Nightly Business Report with Sue Herrera and Bill Griffin.
Tariff tantrum. The White House slaps tariffs on Chinese goods. China retaliates, and investors are left wondering what comes next.
Open house. Homes are selling in record time, even as prices rise, making for a very competitive weekend for house hunters.
Food fight. 1 year ago, Amazon rattled the grocery industry with the acquisition of Whole Foods. But has the sector changed all that much as expected? Those stories and more tonight on Nightly Business Report for this Friday, June the 15th.
Happy Friday and good evening, everyone. Welcome. China is striking back, that country announcing retaliatory tariffs on American products. This after the White House made good on its threat to impose tariffs on Chinese imports, which we reported was likely to happen. The announcements follow a week of tense talks between the world's two largest economies, and it raises the potential for a trade war. Kayla Tausche has the details tonight from Washington.
At an impromptu exchange with reporters on the White House North Lawn, President Trump had praise for China's cooperation on North Korea, but condemnation for its trade practices.
We're putting tariffs on $50 billion worth of technology and other things because we have to, because we've been treated very unfairly. But China's been terrific. President Xi has been terrific. President Moon, everybody, we're all working together because of me.
Tariffs on some 800 Chinese products worth an estimated $34 billion will take effect in 3 weeks. An additional $16 billion could be put in place after July 31st. The goal is to pressure China to make structural reforms that protect U.S. companies' intellectual property. China warned the U.S. was provoking a trade war, hours later unveiling a plan to levy its own tariffs on that same date, totaling the same amount on 545 U.S. products like agricultural products and automobiles. China said additional tariffs on medical equipment and chemicals could come separately. While the U.S. decided not to charge TVs and pharmaceutical products from China in order to minimize the impact on American consumers, industry groups were still dissatisfied, saying tariffs on components of these items will still lead to higher prices for TVs, computers, and phones. The U.S. Chamber of Commerce says the tariffs aren't the right approach and will hurt American consumers, manufacturers, and farmers. The biggest hit from China's retaliation would be felt by U.S. companies sending cars, planes, and ships to China. After that, soybeans, followed by plastics, rubber, and other chemicals, according to an analysis by Peterson Institute for International Economics. U.S. business leaders agree China needs to be held accountable, but it's unclear if President Trump's strategy will be successful.
It is unconventional, and it's unproven. So I think the world is watching to see whether this is just gamesmanship.
So far, the brinksmanship has yet to hit economic growth, but fears of an escalating and protracted trade war could take a toll if the uncertainty causes businesses to pull back on investments. For Nightly Business Report, I'm Kayla Tausche in Washington.
A number of U.S. companies with global operations responded to those tariffs. Among them, Boeing said today it is assessing their possible impact on its supply chain. FedEx said the tariffs on Chinese goods will raise prices for American businesses and consumers. And General Electric said it is concerned that these tariffs will make it harder for U.S. manufacturers to compete in the global economy.
Rising trade tensions have kept investors on guard in recent months. And today it was no different. After falling as much as 280 points, by the close, the Dow Jones Industrial Average was down 84 points to 25,090. The Nasdaq fell 14 and the S&P 500 slipped 3. For the week, the major averages were mixed. Bob Pisani has more on the down day on Wall Street.
Simmering trade tensions once again took the stock market for a ride, snapping a 3-week win streak for the S&P 500. Stocks first sold off on President Donald Trump's tariff announcements, but managed to end the session well off the session lows. The news didn't exactly come as a surprise to investors. The bigger question, though, is how much could trade tensions escalate from here? The markets overall had a defensive tone throughout the day. Consumer staples and telecom and real estate led the gains. Materials, energy, and industrials slumped. And remember, these are all heavily exposed to commodities and trade. Caterpillar was the biggest drag on the Dow. No surprise there. Caterpillar's a big multinational industrial that's become, in a sense, a proxy for the trade wars. Same story with Boeing. But the other big issue is a strong dollar. Many of these multinational companies could get hit hard by a stronger dollar, and we could start to see some of this commentary creep up in earnings report next month. Still, the markets ended at just about break even for the week. Much of the sector leadership, consumer discretionary, consumer staple stocks, still intact, thanks to strong data on consumer spending and corporate earnings that showed no signs of running out of steam. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Now, one small business owner is watching this trade fight very closely because her company took a hit when cheap Chinese products began flooding the market here in the U.S. But as Kate Rogers reports tonight, she did something about it and she won.
Kathy Leonard has run Auburn Manufacturing for almost 4 decades. The small company has 2 facilities in Maine and manufactures heat and fire-resistant fabrics for industrial use, selling to businesses in oil, petroleum, shipbuilding, and even the U.S. Navy. A few years ago, she began losing sizable contracts. Leonard watched about 30% of her business in silica fabric disappear, causing her to lay off 10 employees, about 20% of her workforce. She began to explore why.
As we delved further into that, we found that the materials were coming from China. We were losing contracts, and we found that these prices were up to 30% less than our prices.
The products were being sold to her competitors.
That was when we said, look, we got to do something.
Leonard hired a law firm that handles trade matters. It helped her file an anti-dumping case with the Department of Commerce. 18 months and almost $1 million later, the DOC ruled in Auburn Manufacturing's favor, placing an import duty of between 200 and 300% on that same product her competitors were buying from China.
I felt ebullient for a moment, and then just grateful that it was over, and then moved quickly onto sort of wary about the future, because it doesn't mean you win, and all of a sudden you get all your market back and you make more money. It doesn't work that way.
And while she's hired more workers and gained back some clients, Leonard says the business is still feeling the impacts of Chinese dumping.
Those folks who left are not the ones that came back. They found other jobs, they've moved on. So it really does hurt a company like ours in that we have to find new people and train them to do these jobs.
In the meantime, Leonard has been keenly watching the White House take on China and other nations as it tries to renegotiate trade deals in favor of the U.S. For Nightly Business Report, I'm Kate Rogers.
AT&T's purchase of Time Warner has closed. The two companies wasted no time making the announcement 2 days after a judge ruled that the deal does not violate antitrust laws. AT&T's CEO Randall Stephenson said the combined company will help change how the media and entertainment industry works.
People who had over the last year said this world of media entertainment companies, they're in decline. Oh my, we're building out all new forms of distribution. I mean, 5G is coming. There's going to be opportunities to distribute premium video like we've never imagined. And we actually believed at the time that premium video was a great place to invest and to be, and the tech companies are just demonstrating that to us. And so we want to participate in this.
The Time Warner unit will be renamed Warner Media. Warner Media will fall under the umbrella company of AT&T. Shares of AT&T finished about 2% higher.
Meantime, the European Union has cleared the way for Comcast to buy British broadcaster Sky for $31 billion. Comcast submitted its offer in April, prompting Sky to drop its support for a lower bid from Fox. The Sky acquisition would substantially increase Comcast's international operations, and as a reminder, Comcast is the parent company of CNBC, which produces this program.
To economic news and industrial production, which unexpectedly fell in May. Industrial output, which is a measure of everything produced by the nation's factories, mines, and utilities, slipped 0.1% last month. The decline was due in part to a fire at a major Ford supplier, but it also ends 3 straight months of gains.
Consumer sentiment has risen to its highest level in 3 months. According to the latest survey, consumers are upbeat about their future income and job prospects. Of course, when consumers feel good, in theory, they spend more, which helps lift economic growth.
And when consumers feel really good about their economic prospects, they're more likely to make big purchases, such as a house. But if you're planning on house hunting this weekend, get ready to rush. Homes are selling at a record pace as competition in the market heats up. But there may be a chill on the way. Diana Olick has more.
This fully renovated 6-bedroom bungalow went under contract in less than a week in an up-and-coming D.C. neighborhood that isn't even quite there yet. The competition is just that fierce.
We're probably seeing, maybe 3 to 4 offers on a house. Bidding wars are going up and prices are going up as well.
And it's not just here in D.C. Nationwide, the average home sold in May went under contract in just 34 days, according to Redfin. That broke April's record of 36 days. Redfin began tracking this in 2010. Homes are selling so quickly because there are so few of them for sale. More new listings did come on the market in May, but the total supply of homes for sale was still over 5% lower than last May. The shortage of listings continues to drive prices higher and incite bidding wars.
It's a supply-demand imbalance. We have excess demand and not enough supply. And when we look at rates and we look at affordability, what's driving the market today, the entry level has begun to come back in a real way.
But higher mortgage rates are coming back as well. By May, the popular 30-year fixed hit the highest level in 7 years. Despite all the competition, nearly a quarter of the homes sold in May had already seen price reductions. That's the highest level since last September. It could be a sign that higher interest rates and higher home prices are finally hitting affordability.
It may just be that sellers are overreaching at times for the price, and there's a slight correction there. But good homes that are priced well are still really flying off the market.
Precisely why this one didn't last the week. For Nightly Business Report, I'm Diana Olick in Washington.
Time to take a look now at some of today's upgrades and downgrades. We begin with shares of Southwest Airlines. They were downgraded to hold from buy at Argus over the short term, at least. The analyst there cites pressure from rising fuel costs in the coming quarters, but the firm has a favorable outlook on the stock longer term. Shares rose a fraction today to $52.18. AMD's price target was raised to $21 a share at Cowen. The analyst predicts that the chip maker will report better than expected profits in 2020. The firm maintains its outperform rating. Shares rose slightly to $16.34.
Jabil's price target was cut to $39 at J.P. Morgan. The analyst cites persistent margin headwinds. The call comes after Jabil reported a strong quarter but weaker than expected cash flow. The stock fell 6.5% to $27.73. And coverage of United Technologies was resumed with an overweight rating at Morgan Stanley. The analyst cites the potential for a corporate restructuring and is positive on the Rockwell Collins acquisition. The price target there is $160. The stock fell just slightly today to $126.91.
Still ahead, a stock that our market monitor says is in the sweet spot. His list of recommendations coming up. Late today, Theranos founder Elizabeth Holmes was charged with wire fraud, and the company announced that she was also stepping down as CEO. All of this 3 months after she was sued by the Securities and Exchange Commission for what it called massive fraud. Today's indictment accuses Holmes of engaging in a multi-million-dollar scheme to defraud investors. At its peak, Theranos had a value of $9 billion and claimed to have a revolutionary system that would change the blood testing industry. That claim, though, has since been widely called into question.
A court has approved Wells Fargo's $142 million class action settlement. The agreement compensates customers who were part of the bank's fake account scandal. The money will go to anyone who claims that an account was opened without their consent. Wells Fargo calls it a significant step forward for the bank.
And Citigroup has agreed to pay $100 million to settle charges that it rigged a benchmark interest rate. The suit filed by 42 state attorneys general had alleged that Citi manipulated the so-called LIBOR rate as a way to increase its profit at the expense of investors. The LIBOR rate, as you may know, is used to price everything from credit cards to mortgages.
Okay, take yourself back 1 year ago. It was then that Amazon said it would buy Whole Foods. The announcement sent a chill through the sector, pressuring grocery stocks, with many saying the industry would be turned upside down. Courtney Reagan takes a look at where things stand 1 year later.
One year ago, two new players entered the highly competitive U.S. supermarket industry. Amazon with its purchase of Whole Foods and low-priced German grocer Lidl. Many expected the two would usher in big change quickly, but that's not exactly what happened, something Whole Foods shoppers have noticed.
There's a few items that are cheaper. Generally, I don't notice anything that's worse.
I think initially there seemed to be some bumps in the supply chain, some things that used to be regulars on the shelves weren't there anymore.
It seems like a lot of things are missing from the store.
It's taken longer than many expected for Amazon to begin integrating what it's known for, decent prices and fast delivery. Whole Foods did cut prices on core items like milk, eggs, and bananas right out of the gate, but that was pretty much it. It was just last month that Prime members in some stores got a 10% discount on hundreds of items. As of this week, less than half of Whole Foods stores offer this benefit.
When it comes to online grocery delivery, Whole Foods still offers Instacart as an option for an additional fee. But grocery delivery for Prime members is only available in 14 cities. Even though change has been slow, it hasn't stopped shoppers from coming into stores.
In our store checks, we're seeing not only higher traffic, but I think more importantly, you're hearing consumers say, you know what, I would shop at Whole Foods and I'd shop at these other stores for other parts of my grocery store trip.
While Amazon has been a low-price leader online, Lidl has been a low-price leader in Europe for decades, and it opened its first U.S. store a year ago today. Lidl's original goal was to open up to 100 stores in the first year. Today, there are just 53. The grocer says it's changing its original U.S. strategy and looking at different sizes and locations for its stores. A recent survey shows nearly half of consumers who tried Lidl are shopping there regularly and spending more than they were a year ago. Lidl and Whole Foods put Walmart and Kroger on the defensive. The top two grocers in the country maintained their position by investing in online ordering and different delivery options, and it appears to have paid off.
You've seen Walmart and Kroger move at a really rapid speed to cut prices, add technology, make the stores more attractive. They're cutting prices. They're trying to make sure that the consumer doesn't have reason to try some of these other places like a Whole Foods or like a Lidl.
But the food fight isn't over yet. For Nightly Business Report, I'm Courtney Reagan in New York City.
Canada Goose reports a surprise profit, and that's where we begin tonight's Market Focus. The luxury apparel maker more than doubled its sales this quarter, helping overall results below past expectations. The company also said that it sees revenue growing at least 20% over the next 3 years. Shares soared, as you might imagine, by 33% to $61.02. Apple is reportedly planning to use LCD screens as opposed to OLED screens in the upcoming iPhone models because they are cheaper for the consumer. The news weighed on shares of Universal Display and LG Display, two of the companies that supply those OLED screens. Shares of Universal Display were off nearly 5%, while we had LG Display shares down more than 7% in today's trade. Then General Motors is reportedly considering publicly listing shares of its self-driving car unit or spinning off that division entirely. Bloomberg says the car maker is in talks with banks about that potential, whatever options they may have for that. Shares of General Motors rose fractionally to $43.91.
Bristol Myers says its lung cancer drug has been approved by Chinese regulators, marking the first immuno-oncology treatment to be approved in China. The medication is already approved in more than 60 other countries. Bristol Myers shares climbed 2% to $54.80. Reuters says that Qualcomm's $44 billion merger with NXP Semiconductors has not been approved by Chinese regulators just yet. That report came after Bloomberg and a Chinese publication both said the deal was given the green light by China's Ministry of Commerce. NXP shares were up a fraction to $113.16. Shares of Qualcomm also rose slightly to $59.86.
This week's Market Monitor is betting that his three picks will continue to offer investors growth, income, and reasonable valuations. It's his first time with us as Market Monitor. Mike Bailey is Director of Research at FBB Capital Markets. Mike, thanks for joining us tonight.
Great, thanks for having me.
So you want growth, income, and value. Sounds like you want it all with these three.
We want it all. That's right. We're greedy. We want your cake and eat it too. So we think some of these opportunities are out there.
Let's start first with your first pick. which would be, the symbol is ROP, Roper Technology. And you say they have an edge by going in and kind of remedying a problem that an existing company might have.
That's right. Roper is sort of one of the more interesting industrial companies that nobody's ever heard of. They don't have a big flashy turbo engine or something like that to sort of put on TV. They're a collection of a bunch of really small products and companies that previously, before Roper came along, had nice assets, but were run poorly. Roper really scours the earth, looks for good products and increasingly technology and software. Buys those businesses, brings them in-house and really kind of streamlines things, maybe brings in a new management team, and just like that, a great track record in terms of really boosting margins, kind of ripping costs out of the system and growing nicely. So they're actually they finished up one big wave of projects, and they're on to their next wave. They're planning on, I think, putting away $7 billion into some new acquisitions the next 4 years. They actually just made their first deal, so the first of the $7 billion, and Wall Street's already starting to take their profit estimates up. So I think we've got a very nice runway here over the next few years.
Now here's a company that everybody's heard of, but it's in a very competitive area. That would be Charles Schwab in the brokerage industry.
That's right. So Schwab is, as you said, definitely becoming even more of a household name. They're really doing very nicely. So in the very short term, certainly the tax cuts are helping them among other companies. The other thing that's really helping Schwab is rising interest rates. So most people think of Schwab as, just kind of a discount broker, and you go and you do trades online for $5. In fact, they actually are a bank in a way. That's really where they're generating a ton of their profits. And their bank was essentially making nothing last year. And as rates go up, they're making very nice interest income on just massive amounts of cash that's in their system. So we're just seeing profits really kind of spike up in 2018.
Okay.
The question might be, is that a sugar high? Does that fall off next year? They do have some very nice growth over the next couple of years that continues. So we like the story there, and they are taking their dividend up. So that's another attractive part.
That's another win. Microchip Technologies, you say they have two ways to win. One, grows earnings by acquiring smaller semiconductor companies, or they get acquired.
That's right. So you can maybe think in your imagination kind of the big fish eating the little fish kind of thing. Microchip is kind of that fish in the middle. So they've been doing a pretty good job the last few years, looking around at smaller competitors, really buying them up, similar to what Roper's done, just really stripping costs out of the system, kind of making the business grow more quickly. And they've done a good job of that. They just sort of bought another company a couple months ago. However, we do think that Microchip is in a bit of a sweet spot. So they're big enough that a much bigger semiconductor company that's out there could swoop in and buy them. And Microchip is big enough to really move the needle for kind of one of the larger companies out there. So we do think that it's one of the rare kind of semiconductor companies that's sort of in that middle spot where they can sort of make money on both sides.
Very good. Mike, good to see you again. Thanks for joining us tonight.
Great. Thanks for having me.
Mike Bailey with FBB Capital Partners, and you can read more about his picks. Just go to our website at nbr.com.
Coming up, companies that are taking a swing at golf's growth.
Merrill Lynch is considering an about phase when it comes to retirement accounts. With the demise of the so-called fiduciary rule, the firm is now looking into reversing a policy of banning commissions on such accounts. The rule required brokers to act as fiduciaries, placing client interests ahead of their own. Commissions were seen as creating the potential for brokers to offer conflicted advice, though.
Google's latest report on diversity shows little has changed at the company. The number of women, Black, and Latin employees rose just 0.1% in the past year. Google did report changes at the leadership level. Global female leaders reached more than 25%, up from about 21% in 2014. The company says it plans to focus on diversity efforts and is optimistic it will make progress.
The U.S. Open golf tournament is underway at Shinnecock Hills Golf Club this weekend in Southampton, New York. The game has made big strides in recent years, but to attract new and younger players, new fashion trends are emerging on the greens. Dominic Chu, lucky guy that he is watching the action for us tonight.
Golf looks a lot different today than it did just 60, 40, or even 10 years ago. As the game has evolved beyond just the secluded country clubs and exclusive zip codes across the world, so have the trends in golf clothing. And much of that is on display at this year's U.S. Open Golf Championship at Shinnecock Hills. Knee-high socks and loose-fitting clothes are out.
Performance fabric is still trending. Colors, bright colors, neons, that's trending. Fit, instead of a big, blousy, oversized golf shirt, people are now wearing more fit pieces. And I think that one big thing we're seeing is a lot of athleisure, so quarter zips, pullovers.
The golf industry is looking to broaden its appeal, and a variety of different companies are taking advantage of that opportunity. From upstarts like Foray Golf, where a team of fashion industry veterans are looking to find the intersection between the fairway and the runway, with a line of fashion-forward women's attire. Malbon Golf wants to bring West Coast streetwear to the links, and athletic apparel giant Puma is gearing some of its strategy towards bringing a youthful approach to retro designs. Much of the growth in golf is coming from younger players, with women and girls making up a bigger part of that story. And golf brands are watching those trends very closely. For Nightly Business Report, I'm Dominic Chu in Southampton, New York.
And before we go, here's another look at the day on Wall Street. The Dow was down 84 points to 25,090. The Nasdaq fell 14 and the S&P 500 slipped 3. For the week, the major averages were pretty much mixed. And that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching. Happy Father's Day.
Thank you, and to your husband as well. I'm Bill Griffith. Have a great weekend. Happy Father's Day to all the fathers. We'll see you Monday.